Hey guys, welcome to the channel Market Uncharted. In today's video we are going to go again on the silver short squeeze, the silver squeeze 2.0. Why? Because again the conditions are met for a potential up on the price of silver and gold. But first let's talk about of these conditions. As the inflations continue to surprise all across the world, here we can see just a comparison between US and Europe. The inflation rate is going through the roof. Lagarde and also Jerome Powell already confirmed inflation is not transitory. This is something that's going to stay with us. Inflation can just go back down to 2%, is going to sustain across the years, and we need an edge of these inflations. Of course, as we already discussed this, not only gold and silver, there is other commodities that can and will give protection to this inflation. Here we can see commodities to equity ratio, where we can see how extremely cheap commodities are versus the growth stocks versus the other S&P 500 and other indices stocks. And this is again an idea of an asymmetric trade. We don't buy at all-time highs, we buy at all-time lows, or where everyone else is not looking at. Why? Because when people start to look into our sectors, then it's time to move on. Here also a comparison between growth stocks and gold miners. And why this is important? Because gold miners and silver miners are printing money. Every month we can tell that to the current prices, these companies are flooded with cash. The cash flows are really positive. The debt to equity is really low. These miners are well run and provide here an opportunity. And again, we are in the triple top after the 2015 correction, the 2018 meltdown. Again, we are close to this comparison between the peak tech bubble is way past us. We are above these levels, and the gold miners and silver miners still represent a really good opportunity. Again, to reinforce the idea, gold to S&P 500 ratio, gold is starting to show possibilities to break out. And why I talk about gold before silver? Because gold actually is the mother of all commodities. They show the way. Silver usually outperforms gold but needs the index. Here again with source from Bloomberg and Crescat Capital, commodity producers relative to global equities. Once again, the ratios are still really low. And then if we compare also the potential and position of gold and silver miners relative to commodity producers, still a really upturn possibility. The aggregate market capital ratio is still within normal levels. Gold also showing potentially to break out, leading the way then to the other, in this case silver and other commodities. Once again, just a projection on the 2022 free cash flow estimate. Once again, gold and silver miners printing money. The median free cash flow yield with enterprise value since 2020 already positive, showing that this is a good place to park your money. Now talking a little bit about the COMEX and the precious metals leaving COMEX. Here again 14.8 tons of gold that departs COMEX, 1.3 million ounces of silver also out of the vault. Really good perspective. And why silver? Again, due to the market conditions, all of this happening, we have an inflationary asset, a monetary metal, historically undervalued. Silver is one of the most undervalued assets in the world. And if you want to get on the green revolution to be more sustainable, you will need silver. Plus all of this, you have the difference between supply and demand, which is pretty obvious by the metals leaving the vault. Now, talking about the graph of silver, we have a potential inverted head and shoulders with a lot of potential upside. This is still important. We are not out of the woods yet. In March, we will have the first rate hike by the Fed. Fed is turning also more hawkish by the day, and this can still print a new low. If not, the major support in silver maintains $21.41. It's still possible that after the FOMC meeting, we have a period of high volatility in all markets across all assets, and at this moment, if we print a new all-time, or in this case a new low from the last couple of years in silver, then this would be a good position to back up the truck. Again, the still a downtrending line is silver. We still have the double bottom and 21.41. It's still possible to see silver around $20 and $19. If that's happened, it's nothing more than opportunity to buy. The silver squeeze is still on. The silver squeeze is happening by the day. If you continue to buy the physical metal, this is visible. If not, you also have other possibilities. Here just the top ETFs on physical silver and mining. Of course, there are always other ideas. This is not something I invest in, these ETFs. Is just to put it out there so you can see the possibility. The 1 year returns are still really positive. On my personal level, this is something I really like to invest, is the Sprott Physical Silver Trust, PSLV. Once again, guys, this is not financial advice, but it's something important to see. Not SLV, but PSLV, the Sprott Physical Trust, that we can actually see that already have 150 million ounces of physical silver in the vaults. For people that have a more appetite for volatility and risk, you have always the ETF SILJ, the Silver Miners ETF. And recently I came across also to the Silver Covered Call ETN, which provides liquidity, which provides the passive income on a monthly basis. You need to also take a look on our videos about the cover call strategy. This is not something on a bull market that will give a lot of return, but on a monthly basis, the passive income is really important as well. So thank you guys so much for watching this video, an update on the silver squeeze. I hope you like it. Please never forget, knowledge is not power, knowledge is potential power, execution is everything. And just like the markets, we will not rest.